traders, look at this great breakout trade. It was caught with my breakout trading strategy, and in this video I'll teach you my 5 steps breakout trading strategy. Stop loss placement, entry selection, target selection, everything is inside. So enjoy that. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. The first step is to identify what should be broken, and here we are on a pound dollar pair, and here I see a very nice horizontal trading range, a horizontal channel. Look, here we have this channel. You can see that the market is trading within the boundaries of this channel for a quite long period of time. And as we know, when the price is trading within the range like that, it signifies that the market is very indecisive and it is accumulating. And most of the time, the breakout, the violation of the resistance of the range indicates a highly probable bullish continuation, and the violation of the support of the range signifies a highly probable bearish continuation. And in order to trade the breakout properly, we must identify the boundaries of the range correctly. We need to identify the exact boundaries that must be broken in order to confirm the breakout. Hey traders, if you want to see how I trade live, if you want to see how I analyze the market live, if you want to see how I look for trading opportunities, if you want to see how I manage my trades, you will definitely enjoy my premium educational group. There I do live streaming. There I show you live trading. It will be the best place for you to be if you want to learn how to trade. For more info, check my website. It is vasilytrader.com/private group, or text me in one of the social networks. I will give you more details. In order to identify the boundaries of the structure that must be broken, let me share with you my rules. The first thing to consider are the wicks. Look at this wicks. You can see that here the price tested different levels lying very close to each other. And your first task right here is to unite all these levels in one single area, so that here you have your structure cluster. And here you can see that we took the lower points of these candles. Yes, and here is the first step. The second step is to take into consideration the lowest candle close among the candles that you took. Yes, and our lowest candle close is right here. Yes, based on that structure level. So what we do, we extend our zone based on that lowest candle close. So here's our lower boundary of the range that we spotted. Now let's spot the upper boundary. And again, the first step is to take into consideration the wicks. Yes, here you can see that the price tested different levels lying very close to each other. And our task right here is to unite all these levels in one single area. Yes, so you can see that we drew the area that is based on all these wicks. And then the lower boundary of the zone that we spotted must be based on the highest candle close within the candles that we took. And here you can see that they match perfectly. You can see that the wicks right here match with the highest candle close right here. So that is our resistance. So you can see that with these rules, we accurately spotted the support and the resistance of this range. Now let's go to the next step. The next step is to know exactly when the structure that we spotted is broken. And you can see that the channel, the range that we spotted, is on 4-hour time frame. So in order to confirm the breakout of the resistance of the channel, we need the 4-hour candle close above its upper boundary. And in order to confirm the breakout of the support of the range, we need the 4-hour candle close below its lower boundary. Only then the breakout is confirmed. And after a couple of hours, you can see that our range was broken to the upside. Here we got the 4-hour candle close above the resistance of the range, and from a current perspective we see that the breakout is confirmed. So what is next? Once this structure breakout is confirmed, we need to identify our entry level. And in case if the price breaks the resistance, our entry point will be based on the highest candle close within the structure area that we spotted. Where is our highest candle close? Here it goes. That will be our entry point. That will be the point from where we'll buy. So you can see that once the structure is broken, we are not buying aggressively. We are waiting for the retest of the broken structure. And just in case if the price violates the support of the range, if the price breaks the support, your entry point will be the lowest candle close within the zone that you spotted. So your entry will be right here. Once we identified our entry level, the next step is to identify the level of our stop loss. And in case if we buy the market, we set our stop below the closest strong structure. And if we sell the market, then we set our stop loss above the closest strong structure. Here we are buying, we got the bullish breakout, so our stop loss will lie below the closest strong structure. Our closest strong structure is right here, this structure shelf, and our stop loss must lie strictly below that to make our position safe. By the way, traders, if you want to learn how to set a stop loss, watch this video. There I explained my entire trading strategy on stop loss placement. And for setting our stop loss, we will apply a fib extension tool. Let me show you how to apply that properly. In order to set a stop loss with the fib extension tool, we need 2 points. The first point is our entry level, and the second point is the lower boundary of the structure that we spotted. So you can see that we draw the fib extension, and our stop loss will be 1272 extension. Yes, that will be our stop loss level. The next step is to identify our target level. And where should be our target level? It should be based on the closest key level, on the closest strong structure. And where is our closest strong structure? Our closest strong structure is right here. Why that structure? Because from that structure, the strong bearish rally initiated. Once the price reached that level, we saw a strong bearish continuation from that. And definitely for the market participants, that structure is very important. So from a current perspective, we have our entry level, we have our stop loss, and we have the target level. So we can project our trade. Buying the market from here, setting our stop based on 1272 extension, and setting our target right here, we have almost 1.5 risk to reward. And how we buy the market right here? We buy the market with the buy limit order. Once you got the confirmed breakout, you set your buy limit order on a retest. And once you are in a trade, remember to be patient. Remember that once the price reaches your entry level, there is no guarantee that the market will go immediately to your target. Remember that the market can trade below your entry for a very long period of time. So patience is the key right here. Learn to be disciplined, learn to be consistent, and the magic things will happen with you. Alright traders, I hope that you enjoyed this video, and I hope that this trading strategy will help you to make a lot of money. Let me know in the comment section, traders, what strategy do you want to learn in the next videos. Also, please like this video, subscribe to my YouTube channel, and I will see you next week.